The Eastern understanding of money is very simple. They're very calm. There's not a plan B to de-dollarize. It was a plan A all along. They've been waiting for America to get over its skis in debt, weaponize its dollar, and give Russia and China the excuse to start what is now a clear trend of de-dollarization, the details of which are, and the evidence of which are everywhere. The dollar is the world reserve currency. It is an exorbitant privilege. It's been the tail that's wagged the dog of the world since 1944 for good and bad reasons. But like every empire, it's now debased its dollar to such a level, it's gone into so much debt that gold is replacing the U.S. Treasury and the U.S. dollar as a reserve asset. I mean, as a savings asset.
Renowned partner of Matterhorn Asset Management AG, MatthewPiepenburg, asserts that gold is replacing the U.S. dollar, while he clarifies that this shift does not signify the end of the U.S. dollar or America, but it does mark the end of American hegemony. According to Piepenburg, the Eastern approach to money is pragmatic, with nations like China and Russia gearing up to de-dollarize as the U.S. overextends its financial reach. He argues that despite the dollar's historical reserve currency status, it has been devalued to such an extent that gold is now seen as a more stable asset. Russia announced in April that its bilateral trade with China has almost completely moved away from using the U.S. dollar, highlighting the two countries' commitment to reducing their reliance on the U.S.-led economic system. Aside from reducing dependency on the Western-dominated global currency, these de-dollarization efforts allow Russia and China to avoid the myriad sanctions preventing Moscow from doing business on the international market. Despite traditional market conditions that would normally hinder gold's rise, such as positive real interest rates, controlled inflation, and a relatively strong dollar, gold has reached all-time highs. Piepenburg argues that this decoupling from old Western financial correlations is due to a fundamental lack of trust in the U.S. dollar and its long-term value. From April 1968 to June 2020, for instance, gold increased in value by an average of 7.6% a year in the U.S. When adjusted for inflation, returns averaged 3.6%. Yet in 2013 and 2015, gold's value decreased by 28% and 12%, respectively, suggesting gold is far from the stable safe haven some envision it to be. That's because the price of gold can wildly fluctuate over time and is impacted by movements of global currencies, monetary policy choices made by the U.S. Fed and other central banks, not to mention erratic supply and demand. He acknowledges that the people in the East have a more critical and realistic view of the U.S. dollar and the global financial system, contrasting sharply with the Western perspective. Now, we present the clips of MatthewPiepenburg's insights from his recent interview with Liberty and Finance. Before we continue to delve into this discussion, please subscribe to our channel and activate the bell icon for timely updates.
But that doesn't mean I'm not critical of things. And one of the advantages of being overseas most of the second half of my life and traveling a lot for what I do with Von Greyers is, you know, in Asia, in Turkey, in Europe, I get different views. The Eastern understanding of money is very simple. They're very calm. There's not a plan B to de-dollarize. It was a plan A all along. They've been waiting for America to get over its skis in debt, weaponize its dollar, and give Russia and China the excuse to start what is now a clear trend of de-dollarization, the details of which are, and the evidence of which are everywhere. The dollar is the world reserve currency. It is an exorbitant privilege. It's been the tail that's wagged the dog of the world since 1944 for good and bad reasons. But like every empire, it's now debased its dollar to such a level, it's gone into so much debt that gold is replacing the U.S. Treasury and the U.S. dollar as a reserve asset. I mean, as a savings asset, the U.S. dollar is a spending asset. But when I talk to people in the East who own a lot of gold, whether they're in Turkey or whether they're coming out of Middle Eastern countries or whether they're in China or even Russia, the world wants an asset that can't be taken away and that retains its value. And that doesn't mean they have to create a new world reserve currency. It's not going to be the yuan. It's not going to be the ruble. It's not going to be the peso. It's not going to be the euro. I'm not saying the world reserve currency changes overnight, but its trust and hegemony has changed irrevocably. They will save in gold, and when they need a fiat currency to buy a house or pay for a wedding, they'll sell a little bit off, convert it to current rate, and spend for liquidity, which is exactly, by the way, what our clients do at Von Greyers. The bulk of their wealth is in grams and ounces, not fiat money, but we need fiat money to buy things. So when the dollar gold price is at 2,400, 2,300, 1,800, 1,900. We sell a little bit off and we buy, and that's the way to use gold, and that's what the world is doing. And again, this is not a gold bug argument. You look at the world since 2014, in general, Central banks are net buyers of gold and net sellers of U.S. Treasuries. And that process only accelerated at a much more rapid pace when the U.S. had the brilliant idea of weaponizing a neutral reserve currency against a country the size of Russia, a nuclear power clearly in trade bed with China and the rest of the BRICS nations. So if you look at the average central bank purchasing prior to the war and the weaponization, I think that was at 118 tons. It was still way above average. Post-Ukraine, post-weaponization, that's now, I think, 291 tons. So the average amount of central bank gold buying, which was already net buying since 2014, really accelerated after 2022. Again, because the trust in that world reserve currency, now weaponized and politicized, on top of the fact that it was debt-soaked, is making that dollar less and less trustworthy. That's just simply the truth. And the other evidence of that is beyond central bank purchasing, the embarrassing decision to weaponize against a major power like Russia is, look, typically, every man on Wall Street will tell you that the real headwinds for gold are when you have, positive real rates, inflation under control, and the U.S. dollar relatively stronger than other currencies. We've had all three of those for traditional headwinds in front of gold, and it's reached all-time highs in dollar terms and every other currency. So gold is breaking away from these old Western correlations, these old Western excuses, and that's because regardless of positive real rates, regardless of controlled inflation, or regardless of a relatively stronger horse in the glue factory in the DXY and the dollar, no one trusts the dollar. No one trusts that IOU from a debt-soaked sovereign. And so gold is hitting all-time highs despite these headwinds. And that to me is only because trust in that. It's like anyone. You wouldn't borrow from someone who is so far, you wouldn't lend, to someone who's so far in debt and can't repay it without paying you back in a debased IOU. It's just, the evidence is there. And again, the people in the East who get a different media or who have a different conversation at dinner or see a different conversation at the family office or at the banks, they have a different view than the West. The West fundamentally and intentionally misunderstands gold. That, again, is not a gold bug argument. You're a product of your environment. The business schools and the undergrad and econ courses don't talk about Austrian economics or sound money or what really goes on at the Fed.
During the interview, MatthewPiepenburg mentioned that the worsening debt levels and declining trust in fiat currencies, especially the U.S. dollar, are leading to significant economic instability. These issues, he predicts, will create opportunities for dishonest politicians and greater centralization of power. The U.S. debt metrics are now inching towards breaching the $34 trillion mark. The said phenomenon, coupled with the stark economic conditions, has rendered the U.S. dollar helpless. The currency has lost nearly 23% of its purchasing value in the last 5 years, as economic tensions continue to hamper its future progress. Regarding the recent trends, Piepenburg emphasized a significant shift away from the U.S. dollar, signaling a revaluation of their roles in the global financial system. Let's get back to the interview.
The facts haven't changed. They've just gotten worse. The key drivers of the big issues, what's affecting fiat money, whether it's the U.S. dollar, the yen, the peso, the yuan, whatever, all fiat money is an embarrassing ice cube. And certainly since the U.S. reserve currency, the dollar, went off the gold standard post Bretton Woods and then went off the gold standard in 71 under Nixon, all major fiat currencies, including the U.S. dollar, are losing their purchasing power day by day, month by month, year by year in a slow drip. Now that slow drip is kind of accelerating. When you're looking at paper money, which is how the vast majority of the world still measures their wealth, especially in the West, to answer that question, you have to look at bond markets and you have to look at rate markets, and they can get kind of wonky and boring, but you also have to look at politics. But most importantly, you have to look at debt. You always have to start with debt. And when you get to levels of debt that cross the Rubicon of rationality, and you throw out numbers, 120% debt to GDP, 6% deficit to GDP, 35 trillion almost now in public debt, et cetera, et cetera. We could go on. Those numbers feel like figures you memorize and you throw out to look smart, but there's a living, breathing reality behind those numbers. And history confirms the dangers of those debts. And so when again, looking at basic history, whenever a country crosses the Rubicon and gets past that debt threshold of 100% debt to GDP, problems exist. When your debt levels, when your interest expense on your debt alone surpasses your military budget, it's not fable but fact. That's a leading indicator that you're broke. Your country is a banana republic. It's hard in the world where the U.S. is still supreme and still respected for all its past greatness and its current weakness. It's hard to see that, and it's hard to understand that, but it's important to look at it objectively. And it's not just the math and the history, it's the signs all around us, the social unrest, the fourth turning, these, whether you're Rickards or Casey or Neil Howe or even myself. History does matter. It's easier for people to grasp when you go through these empire changes. And I think, it's these late stage empire themes is you've got debt and then you've got wars, which of course we're seeing proxy wars or direct wars right now. You have a decadence, a cultural decadence where everything is permissible and everyone's me first and everyone's a victim, and there's tribalization, splinterization, which is only made worse by inflation and social unrest. And then, of course, you have currency debasement to pay off that debt. And then, of course, after all that comes the opportunists that are either demagogues or dishonest politicians, left or right, and then centralization. So all that's around us. But again, this all is a ripple effect of debt. Look what we just did in 2022 when we weaponized the world reserve currency, and other countries are now leaving the US dollar, the evidence of which is everywhere. It's not just a headline scare tactic. De-dollarization is very real. It doesn't mean the end of the world reserve currency. It doesn't mean the end of America. It doesn't mean the end of the dollar. It just means a different dollar, a different America, a different world reserve currency. It's not being replaced. It's being repriced. If it's being repriced down, what can you do to ensure it? Some would argue Bitcoin can do that. We don't have time to get into that debate. 80% of it is the same as the gold debate, and then it goes in different directions. But if you understand that fiat money is a problem, you have to look at hedges against that risk. That can be in real estate. That can be in art. That can be in physical gold. It's been that way since way before the Old Testament. So it's there. Consider it. Consider it. Gold has beat the S&P since 2000. The fact that it's outperformed every other market in a bear market in the last 15 since 1929. The fact that its annualized return is better than the S&P. And yes, you can look at different periods, but gold makes sense. It makes so much sense. In fact, it's not discussed in the Wall Street Journal, the Financial Times, or at the Fed, or certainly in Congress. So you have to ask why. Why is that being omitted? It doesn't mean it's the only answer, but why is it not talked about? Where it's talked about in the East, much more. Why is China and Russia stacking gold? Why is Saudi Arabia taking gold from Switzerland? Why are they getting outside of the US dollar and petrodollar? Why? Ask yourself. You don't have to just listen to me or you or any of the other guests, but you have to get informed. You have to make your judgment. You'll feel far more free, no matter what the world does to you, when you have your own judgment.
Gold price forecasts for 2030 suggest a significant increase, with some predictions indicating the price could rise to around $7,000 an ounce. This anticipated rise is attributed to persistent high inflation, increasing demand for safe haven assets like gold, and central bank demand becoming a key driver of the gold bull market. How do you envision the future of global finance in the face of growing distrust in fiat currencies and the rise of gold as an alternative? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the next video.